European leaders are meeting in Brussels today to discuss initiatives to jumpstart the European economy. Dell warned of difficult times ahead as corporations pull back on spending after reporting weaker than expected quarterly earnings last night. I'm Taylor Schrantz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell with The Street, and together we bring you the Morning Call Express. The market tried to bounce for 2 days, but that was kind of reversed with more headlines that Greece might leave the euro.
We're getting headlines every single day, and as many excuses everyone wants to make for Europe, it's just not getting any better, and everyone wants to say Greece should stay in, they want Greece to stay in. Just let them go. Rip that Band-Aid off. It hurts for a second, or it might hurt a little bit longer than that, but let's move on. As far as the day and a half bounce, I don't really think traders were expecting much. Okay, we had that 1290 low in the S&P Friday. We bounced back to about 1330. So we worked off a bit of that oversold condition. Now the question is, does that 9% move off the high stick, or do we see lower prices?
Yeah, why don't we take a look at a chart to see if that is enough, because it's sort of the same story that we saw last year and in 2010 out of Europe.
Right, well, last year we were 22% off the highs, the year before 17%, so 9% off the highs. It's a nice correction, but it just might not be much considering we're in the same position with the same problems that are a bit worse, and the solutions we put in place last year or they put in place aren't working, and we're running out of options. So right here on the chart, you'll see, this was the measured move of that head and shoulders pattern down to about 1300. We had this nice little 3-day bounce. We mapped out different resistance areas. We hit this 1329 yesterday. Now the question is, we're opening lower, down about 10 handles. Can you buy versus the low here of 1290, which some traders will? Okay, I'm actually short some indices and I have a few long. So I'm going to see if I could cover some of my shorts, the indices, see if I see some relative strength, and see if anything can go green to kind of pull us out of the red zone today.
Well, back home last night we heard from Dell. They had a very weak quarter, corporate earnings. They said they're slowing, they're not spending on computers. What's going on with this stock?
I just think they've never reinvented themselves. Everyone's going to the tablet, everyone's going handheld, and they're just a laptop PC type company, and it's a commodity that's been just going away. We tried to unravel some of the problems in Cisco's earnings a few weeks ago that everyone tried to blow off. It showed us that we are affected here, that companies' earnings are getting lowered because of the slowdown in Europe, the slowdown in our own public spending, and Dell is just another example of a company that is old school and doesn't reinvent themselves and has exposure out there. More important is really just in tech, I think, is Apple. I have to show the chart real quickly because this will give us clues on whether or not we could hold today. We had a nice move, came in on Monday, we held that 100-day, nice bounce right into resistance. At this particular point, this resistance is still controlling the stock. If we could, it's down $4 or $5, traders are probably going to look to buy this on the open. If it could stay above, just say, 546 to 552 and hold higher, there is a shot that it could show some leadership. But if this level gives way and we see more weakness, chances are that 1290 doesn't hold.
You know what, yesterday we saw the financials for a change. They saw a little bit of a bounce, which was nice. But with these European headlines, is this sustainable at all?
I think people are just looking to see if they could buy deep in the hole, and no one wants to buy on strength because they know even the JP Morgan situation, it's not going away fast. Goldman upgraded JP Morgan. Yes, it was great for a bounce day. You have this lower level here in JP Morgan that you could look at. We tried seeing if this lower level would hold. It didn't. So now you have at least a new pivot to trade against. The low here is 32.26. Now we'll see if it can work its way back here. It's in the red today. Maybe for cash flow, look to it to see if it goes green. But overall, I wouldn't put more than anything than a tier 1 to work in any of these banks right now.
The regionals have performed a little bit better. One name that Stephanie likes is USB. But from a technical standpoint, what are you seeing?
Well, like anything in the market, when we correct, they go lower, but this is definitely acting better. It doesn't have the European exposure. It does not expose to as many of the mortgages. If you look here, it is above all the moving averages. It just held this important moving average as well as the recent support. And I think this is where she spoke about getting involved in some. I think, if you're uncommitted, stay in versus this level. It's going to need time with the market, but this is acting better with some of the regionals.
Well, we're going to get into financials, tech, and a lot more in the longer version of the morning call, so stay tuned for that.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.